Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That guy over there is Fat Man Zoom. I hope everything's good. I just slapped everything together. We'll find out in a second, I guess. Well, what's up, my man?
Do you think that, I could sleep and nobody would have any idea if I was sleeping? Right now?
They might not.
I feel like I'm in college. I'm like, they won't realize that I'm sleeping this whole time.
I'm telling you, I love the hat, man.
You love what?
I'm digging the hat.
Thanks, man. Shout out to Ron Refined, the homies. I just got that this weekend. We went to Ron Refined. A buddy of mine owns a bar.
Yeah.
The person who hired me at my first bar job, he owns that bar. We're good friends.
Yeah.
And this was their new stock. We were there for the Preakness. We were watching the Preakness on the TVs, hanging
Nice.
out. It's a great spot. Yeah, man, we'll see if you could scoop one up. There's a black one. They also have a really cool white one.
Yeah.
See, these are the perks. If you lived in the city, you'd be able to hang out. We all got hats.
Listen, nobody cares about your hat. They care about my hair right now. I chopped it all off, people. Listen, I had it's top down weather, and the hair was just flying in my face. I had to do something.
It looks
about
good,
it.
man.
Yeah, thanks, bro.
We need bold strokes, bold changes. So cutting off the whole freaking party in the back thing is probably a good move.
It's definitely weird. This is the shortest I've had it in probably 5-10 years.
Yeah. It's
Easy,
cool, man.
But yeah,
I remember I had a really huge dread fro back in the day after college. It was long. And then I cut it off for a fundraiser called St. Baldrick's. And they buzzed it like the side of your hair.
Yeah.
Man, that was so weird. That was one of the worst experiences. That next week was just miserable. Can't see hair, headphones in the way. Yeah, you can't see that fade.
You can't. Yeah, it's pretty good. It's on point.
What do you tell them, or you just fade it up, or do you do a one here?
I literally
two?
I literally Google a picture. Hey, make me look like this guy, and they make it happen.
Why didn't they do anything with your beard?
Well, because I like the.
Just a
I'd
little bit trim, little trim up.
Yeah, I probably could have made that happen.
At least the stash.
Yeah.
Anyways, let me shout out my top five. Top five today we have Sean Ethier, Sam Cisneros, Karthikeyan. I pronounced that wrong. Karthikeyan, Jeff Panika, and Rudy Brown. Rudy.
You guys are the best. Except for who's this motherfucker up here?
What's that?
These guys suck. Frankie. That's how I feel about Frankie right now.
Who's that? I didn't see that.
Frankie Aceto says you guys suck. Whatever.
Boogaloo Brown.
Listen, I'm not here for the haters. I'm here for the lovers. But what's up, guys? Hey, thanks, Oliver. Appreciate you.
No, suck is good now. You remember
sick, like that's sick.
Yeah, bad.
Yeah.
Yeah, bad used to be in the 80s. Sick used to be in the 90s. The suck is actually
That's right,
that's a compliment. Yo, you guys suck. I watch every day because you suck so much. Keep sucking, fellas. Keep doing you.
Keep talking that clove talk. That's hilarious. Jorge says, I got a job interview Friday. Your boy's nervous. Good luck, my man.
You remember in management class where we did the interview role play?
Yes. It was very awkward, but it was pretty awesome.
Jorge, I can take you through the crash course, man.
Yeah, we could.
Also, and we'll probably get to some suck so hard. We'll get stock talk, guys, but we got a lot to catch up on personally. Tomorrow, I'm excited. because it's man meal.
It is
Wednesday
man meal
nights.
Yep.
And
We got to make you guys a little bit of a part of that. We need to do a better job.
Yeah, we
of that.
could do a short.
We do
Well,
a
now that
short.
we don't
do
do
like
a
a story,
video,
story
like
or something. Yeah.
a premiere. We could do a little, maybe a Chaos Crew live
Yeah.
where we come in there. So man meal tomorrow is a big. I think the past 4 weeks, everyone has been the best one yet.
I know. They just get better.
And so we're doing a chicken wing shootout. So we're doing best. We're determined to find the best wings in Baltimore. So I think it's going to end up being 12 spots. We're going to get 30 to 40 wings from each spot.
Yeah.
And we're going to decide.
I just housed a dozen of them.
Yeah, we wanted to test.
Literally a half an hour ago.
You think they have a chance to be?
Yeah, they're pretty good. They're pretty
Ibar.
good.
Those Ibar wings.
Yeah, they were pretty damn good.
So stay tuned.
I'm gonna be burping them up
After tomorrow, I'll be able to give you guys an in-depth list of wings in Baltimore because we're doing every single type of wing. I curated it. I pulled some friends, and I think I have a good 12 wings.
Daniel Camarena, listen, man, you didn't go unnoticed yesterday. We just had a ton of talked about. But what's up, bro? It says he's live from the FedEx warehouse.
You know, it's kind of been part of your ritual to shout him out. But also, maybe it's nice to, it's like push them away a little bit so they can come back.
Absence makes the heart grow fonder.
Yeah, exactly. All right, so what are we talking about today as people like and subscribe?
Like and subscribe. So, I am pissed at AT&T.
Yeah, I was hoping you'd have a little bit more of a
I know.
strong title.
So,
Because you said this morning.
I was in a rush.
AT&T fucked me. Or no, AT&T
That's what I
fucked
said.
us.
Fucked us. That's what I said. Yes.
Like, that's a title.
I didn't know how YouTube was
Instead
going to take
of
that.
why AT&T. We could have just bleeped it.
I could have done
Or
that.
why AT&T screwed us.
I could have done that, yeah. So we got that going on, but we also have earnings tomorrow. Target comes out tomorrow. We can talk about some of the earnings that came out today, Home Depot, Walmart. But I also have some really good
Stockwatch Sunday.
reopening plays as well that we can kind of cover, and really just some general sectors and some stocks that are in there, so we can get into that as well. But yeah, man, I think like the big topic of discussion for today for me personally is going to be this AT&T BS, because we have AT&T in the dividend bot, in our long-term dividend bot. So we have an automatic trading bot that trades focused on long-term gains.
Yeah.
Not something that we specifically seek out to day trade or anything like that. And AT&T has been a dividend aristocrat. 25 plus years. It's been a pretty big staple.
Yep.
And they came out news on Monday talking about how, they're going to do this merger with Discovery, which on the surface, it was like, okay, cool. Finally, they're going to get their act together as far as this content side of things. They're bringing in Discovery, who actually knows what they're doing. And it's going to work out wonderfully for Discovery. I mean, I think they're getting the better end of the deal here. That seems to be the trend with AT&T, that everybody else gets the better end of the deal.
Yeah.
But then they come out and say, hey, by the way, we're cutting the dividend in half. We're cutting the dividend in half. Cutting the dividend in half. And just kind of skipped over it.
Yeah.
And so that's why it's down 6%. And it took a while for like people to kind of like say, hey, wait a minute. What's happening with this dividend over here? And that's what we saw later in the evening yesterday. And then today it's down 5.5%. It's the worst day it's had since the pandemic started. So worst day in a year. And so it's really frustrating because it's not like AT&T is something that you're in and out of, right? People buy AT&T, especially like older folks, people like you and me who want to look at something long-term, generate income while still investing in the company, putting our hard-earned dollars into it. And then they come in and do us dirty like that. It wasn't necessarily like, for me, a situation in which it was like, oh, well, I understand what's happening here or whatever. They knew this was coming. Mm-hmm. They knew this was coming before their earnings. And didn't even hit around to anything, and they just kind of blindsided people with it, cutting the dividend in half.
Yeah, initially when we talked about it, I thought there was like this stake split between Discovery and AT&T.
Yeah,
and they're splitting. they're splitting up the company a little bit, creating another company or a holding or whatever. I didn't really understand totally how they were executing that.
A lot of people didn't. It was tough to read through.
I thought it was just the yield was going down. I thought the dividend was staying the same, but because of change of structure, the yield would go down.
Yes.
Which isn't a big deal. But this is not great, which I don't know how this makes sense, because this would actually take them out of the dividend aristocrat status, which is a huge faux pas.
Yeah.
Right?
It's a big deal.
Somebody should have said something so that means if nobody brought that up, which it's almost impossible nobody brought that up.
Yeah.
If nobody brought that up, then that was just either the worst oversight ever, or what's more likely is if you know you're going to give up that status and that's going to be a huge hit, because that's the appeal, like 25, 35, 40 years.
Right.
They always, not only do they keep their dividend, but you have to increase it every year. That means that there's probably something worse going on. Yeah.
And I mean, so just a quote that says that they're resizing the dividend after a $43 billion deal closes with Discovery. We'll seek to target at 40 to 43% payout ratio on upward of $20 billion in free cash flow. So they're basically taking it from a 7% yield and dropping it down to a 4%. This might not sound like a big deal to you that might be listening. They're like, well, it's not that, it's just 3%, but it's still half.
Yeah.
So if you're used to getting a certain amount, all of a sudden your salary gets cut in half, you'd probably be pissed about that. Yeah. So, and that's the situation that we're running into with ourselves too, because we are investors of AT&T. And the part of this that really irks me too is that they've asked a lot of the C-level execs, even a board member that was on CNBC this morning was like, asked about, the drop in the stock, because it dropped, 5-6% at the time. And they basically were just like, well, we're not traders.
Yeah.
We're just going to, look at this and look at the long term here. And it's like, well, this is part of your long-term strategy, your long-term fundamental. You're fundamentally changing the stock, the structure of the stock of the company. And so this isn't just a short-term issue. This is going to turn into something long-term. And this is almost feels like it's worse than the Dish acquisition that they bought for, $85 million and then sold it for 50% loss. Like, it just, I don't know.
Yeah, so team coaching us, what is the dividend bot going to do? Let's get into that. So the dividend bot does automated trading, but we create the strategy with our partner Jake, and we determine the positions that it gets into.
Yeah.
And to your point about what are we going to do, and AT&T's dividend, which was around 7%, I normally will bring a stock to you and be like, I'm thinking about this, and you'll say, okay, yay or nay.
Yeah.
But when I was looking at Verizon and AT&T. Verizon is a better company than AT&T. They're looked at as competitors. Yeah. Verizon is better. I don't think anybody would disagree with that.
Correct. Yeah, I agree.
But when you look at the yield, Verizon was about 4%, a little over 4%, and AT&T was at 7%. So you almost got a 2-to-1. So you were confident in that 7%, and you knew that it would be steady. And so the upside was worth investing in it. And it basically made it offset the Verizon competitive advantage.
Yeah.
Now you have rendered that useless. And so now if you both have a 4% yield, all things are equal, you got to take Verizon. So for us, which we already have Verizon in there, Verizon will be a bigger play of that. And so for me, if I'm in AT&T, I don't want any part of AT&T. I would shift more of my money into Verizon.
Yeah.
But then also considering other dividend plays, potentially an international dividend. We've been an international dividend aristocrat because it's one of the important criteria for us for a large part of the portfolio. And then something like SPG we've been talking about throwing in there. So every quarter we kind of evaluate. So when that quarter's up, we'll look at some other options and we'll let you guys know what we finalize. I mean, we haven't yet fully decided to get out of it for the bot, but we're pretty damn close.
Yeah.
Yeah. So we'll let you guys know if we decide to remove it from the portfolio for the dividend bot and then what we replace it with. So make sure you guys like and subscribe if you're interested to stay updated, because we'll let you know on the live stream.
T-Mobile looks really good right now too. This whole ordeal just makes Verizon and T-Mobile look way better.
What is happening with Verizon right now? Has it moved at all on this?
Yeah, Verizon was up today. T-Mobile was up today too. I don't know where they're at right now. I'll go ahead and pull that up in a second. But I just think that the worst mistake that AT&T ever made was getting into the entertainment biz, and they should have just stuck with communications and been done with it, because they just completely botched the whole thing. If we look at Verizon, let's go ahead and pull that up. It is, it's actually down 1%, but it's not nearly as bad as what AT&T was. I don't know. T-Mobile,
Airbnb staying green.
Yeah, Airbnb is looking good today. T-Mobile is also down. So it looks like communications in general is taking a hit. I think probably just, it's AT&T dragging them down. But in my opinion, I think that I would be all over Verizon at this point. If you're looking for something a good dividend in this space, then this is probably one that you want to kind of shift over to, if it were me.
Ivan Broski said, I sold 100 shares of AT&T and bought Altria, but I kept 100 shares of AT&T as well. I don't think that, if AT&T was green tomorrow, I wouldn't necessarily be surprised.
Yeah.
I don't think this is a death sentence, but I think that this is something that should be cause for concern from a long-term perspective and could sort of be another piece of the unraveling of AT&T.
Right.
And maybe it doesn't stay around for the long term, but yeah, I mean, it looks, now the Dish sale makes a lot of sense. Why would you, you're right about their acquisitions. They do a really poor job apparently on their acquisitions, but them getting that off the books, it seems like in hindsight, that was something that was a piece of this whole puzzle with what they knew they were going to do with the acquisition of Discovery.
Yeah, it just sucks. It just really sucks. I thought that they would have had their shit figured out, especially with the way that they kind of spun the last earnings report. So, but it is what it is. Appreciate that, John Hughes. Levindo says, is it okay to keep AT&T at an average of 27.54? I mean, yeah, you can keep it. You don't have to sell it. We're just kind of explaining our frustrations with it because, and we're green on AT&T as well from our entry, for average cost.
How is the bot doing?
The bot's doing still pretty. It had a down day yesterday and into today, but it's been doing pretty good. Still up over 24%.
Got it.
But if you're in AT&T and you're still happy with a 4% and you have years before you're retiring, okay, fine. My thing is what's the next thing they're going to do? And I think that's just where I'm at with it. It's not necessarily because I'm not green on it and I could kind of weather the storm. It's just what's next? What are they going to do to screw us over next time? And I think that's just where I'm at with it, Levindo. So I think that's my sentiment. Nobody says that you have to sell it. 4% still very good. It's within the 95th percentile of all dividend stocks. So AT&T still has a really good dividend when you compare it to other stocks that have dividends. But it's when's the next shoe going to drop? And I think that's just where I'm at with it.
Yeah. It's just we're looking at a risk reward perspective. To be clear, it could go back up. It could get back on track. But I think this has been painted the risk reward situation a little bit more risky. So for me, everything has an opportunity for upside, for reward, but it's too much of a coin flip for me to feel confident in buying it.
Yeah, absolutely. All right, so moving on, I actually ended up doing some research last night on some stuff, and I kind of wanted to get your thought on just the reopening in general, and I picked out certain sectors that I thought were going to continue to do well and are still buys. And I picked out a few stocks from Fundstrat. If you guys are familiar with Fundstrat, they sent out a list of reopening stocks, and I kind of picked the ones that were my favorite and kind of wanted to get your thoughts on them. So I was just going to run them by you and kind of see what you thought. But my first one's going to be in the airlines. In the airline industry right now, Obviously, it has been hot. There's definitely ones that we still love. No pun intended, but it still is Southwest. But Southwest, if we look at the chart right now, and I'm just going on the weekly chart, I'm actually going to pull this back. Oh, no, the weekly is probably a better, just so you get a better idea. It's well above the pre-pandemic highs. Now, people could argue, well, there's going to be a double the demand, could even triple over the summertime. We already have seen how tickets to fly anywhere has just gone through the roof. And so this could explain a lot of the reason why. But there are still airlines out there that I think are good buys that actually aren't this high and aren't above their pre-pandemic. I keep saying pre-pandemic highs. And one of them is Alaska Airlines. This one actually, I think, is probably a good one. It's actually down on the day. It could be a good opportunity. It's at the pre-market or pre-pandemic highs right now, but I think that this could be potentially on a pretty decent setup for a breakout. When we saw this with Southwest, it certainly did that. I'm also looking at potentially JetBlue as well. This is a little bit cheaper. These are just smaller airlines with good balance sheets, relatively speaking, if we're comparing apples to apples. And I think that these are going to be good ones to potentially grab that haven't gone quite as high as JetBlue. And then lastly is going to be Delta.
So
Delta, in my opinion, is probably the one that has the most upside.
Yep.
Given where it's at, it's hovering right around its 200 moving day average.
Yep.
We're still waiting on international travel to come back.
Tell them.
Southeast Asia, as well as Europe. We just heard news that the Biden administration is sending over 20 million doses of the vaccine to Europe. So as they continue to fight the virus and catch up to the U.S. as far as COVID cases are concerned, I think that Delta definitely stands to be a really good buy too.
Preach. I mean, Delta, that's the one I have in the long-term trading account for us. And for those same reasons. And you want to sort of, with the market being forward-looking, like it's only going to be a matter of time before it catches up. Doesn't surprise us that out of all of them, it's a little bit lower.
Yeah.
But it's always been 1-2 with Southwest.
Yeah. It's the international exposure that's why Delta hasn't moved quite as much, but I think that gives it the opportunity.
Yeah, so my point is we both made that point.
Yeah.
My point is the fact that you don't want to wait till they tell you it's back. It's a forward-looking vessel. So you talk about that all the time. So you would want to get in now knowing that eventually international, or I would want to get in now. Eventually, international is going to come back. And that's why I chose it for the long-term account. But all those are good. Even Spirit, like I was thinking about Spirit, which is based in Florida.
Yeah.
Save Spirit Airlines, not Spirit Aerosystems.
Yeah.
Save still has a little bit of upside from the pre-pandemic. And my thought is with all the flight prices being like through the roof, maybe something like Spirit it's going to push people towards Spirit, which is a low-cost carrier.
Yeah, and I think that's definitely, you could definitely make the case for that as far as a bull case is concerned with Save as well.
What's the next industry?
The next industry that I've been looking at has been the cruise industry, and we just actually heard news today that Norwegian is working with the CDC on plans to start sailing again very, very soon as June. NCLH is the ticker symbol. We look at Norwegian right now. I think that it's Norwegian and Royal Caribbean, and the rest of them are terrible. There's not one part of me that would want Carnival Cruise Lines. But you look at NCLH, and there's still plenty of upside to go here. Yeah. Yes, they have a lot of debt. Yes, they're going to convert a lot of it. So make sure that you're keeping an eye on that. But if you want exposure to the cruises, I think that Royal Caribbean and NCLH are going to be the ones to own because they have the least amount of debt compared to their other competitors. You look at Royal Caribbean. Yes, it's priced a little bit higher, but I think that it's deservedly so. And you look at the chart. Honestly, I think that Royal Caribbean's probably my favorite one out of the two. But you can make the argument for both of them.
Yeah, I have Royal Caribbean. I like this list.
Yeah,
because I have these things
so
in here.
far so good.
Slightly green in my long-term account with Delta and Royal Caribbean, and still upside. So I feel confident in the position.
Yeah.
But even a better example of forward-looking. You don't want to wait till cruise liners launch.
By the time you hear the news, it's already too late.
Yeah, it's already too late. That's good. Good stuff.
The next one's going to be the casinos, and MGM actually. I brought this up to our level 3 folks in the Chaos Crew. Shout out. If you guys want to be a part of the Chaos Crew, make sure you're hitting that join button next to subscribe. But if you look at MGM, it actually popped up as much as 4.5% this morning. But this one is another one that I think just the casino plays in general. We loved MGM. They have one of the best balance sheets in the casino industry. And I think, I mentioned this morning with our folks as well. Like the insiders that bought, I think it was upwards of like $40 million worth of MGM at like $12, $13. The insiders that bought it were like, they've got to be reeling in it right now because it's gone up 4 times that just about. So I think, this is still going to go up. I know that it's gone up above its pre-pandemic highs, but the upside here is still really great. We talked about the MGM Sportsbook or MGM Bets. And their relationship with the NFL, that's still going to propel them. And we haven't even, and Macau isn't even fully opened up either. And that's where a lot of their income comes from. But it's really encouraging to see that Vegas is fully reopened. I think another one that I like on the list as well, as far as COVID or the casino plays are concerned, is Las Vegas Sands and then also Wynn Resorts. There's both also... Wynn Resorts in particular relies heavily on Macau, but I think that these both still have some pretty good upsides to them as well.
Yeah, I'm glad you mentioned Macau for MGM. That's one you were talking about in my Fat Man Zoom account, which is my long-term investing account. 10 stocks, that's it.
Yeah.
MGM is the M in Fat Man Zoom.
Yes.
And I got that at $14. Those are great.
You got MGM at $14? Hell yeah.
I got
That's
MGM
awesome.
at $14.
Hell yeah.
I'm surprised you didn't say Penn.
So I was going to bring up Penn, but I figured everybody was already going to know that.
Yeah, okay.
But for those of you who are new to the channel, shout out. Hope you subscribe. But yes, Penn is obviously our favorite one. The largest regional casino in the country. Obviously, sports betting also tied to Barstool Sports. But yes, this is our favorite one, highest conviction out of all of them. But we've talked about this a lot. So the next one, I think, for me is going to be theme parks. And the obvious one is Disney, but there's other ones. I think that Disney has gotten beaten down enough over the last earnings that it makes sense to start scooping some up. It's sitting here right around $170 and holding support actually pretty well. Even on the weekly chart, this is holding pretty well. So I think that this is going to be a good one to grab. But there's other ones in this space as well. Six Flags is one that I think that has some room to run as well. I don't think this is going to stop anytime soon. This is actually below its pre-pandemic highs, unlike Disney. So I think that if we look at this one, this has lots of upside to it as well. And then there's also SeaWorld, which has actually gone absolutely crazy. So I think that there's definitely this one you could be a little bit patient on, but there's no reason to believe that this doesn't go higher as well from here.
Yeah. I mean, isn't it crazy just how much better Disney is than the rest of them?
Well, yeah. I mean,
it's such a joke.
It's nice to just have an entertainment business on the side of it.
I know. I mean, like it's like fight for second place. But yeah, I'm interested in especially something like SeaWorld from the long term. But as far as reopening's concerned,
people just want to get out and do stuff.
I think those are good opportunities. Yeah, like a good high upside, I think, have a pop to it. What's the next one? I think I know what the next one is.
Live events is one that maybe folks haven't really considered. I think that LYV, I actually bought some of this today. Live Nation is one that I think is going to absolutely crush it. They're already selling they sold 100,000 tickets for their Houston venues and their concerts down there already. And I think and they sold 100,000 within an hour. Of putting them out. So that's just how high demand is for this. I think that Live Nation, they also are head up Lollapalooza, which is huge.
Yep.
I think that you look at this, even though it is slightly above pre-market or pre-pandemic highs. Jesus, this is probably going to continue to go up. I think $100 comes for this easy, and in my opinion, this goes higher. You look at some other ones. There's Madison Square Garden,
Yeah,
MSGS. Boy. I knew you were going to like this one. MSGS, Madison Square Gardens Corp. If you guys don't know who they are, this is obviously an entertainment business, but yes, they have stake in the Knicks as well as the New York Rangers, the hockey team.
But they make their money on events. Like
they
concerts.
make their yes, absolutely. So to go along with that theme of just them selling out concerts and other stuff, events, And, there's the side of this as well with fans coming back into the stands, all that stuff. This is really low. The upside here, I think, is very, very good.
Let's go.
For Madison Square Garden. 185.80 is where it's sitting at right now. And it was $316.39 pre-pandemic.
Hell yeah, worst owner in the business.
Yeah. And you pointed out this morning, too, like, if the Knicks actually do a decent job in the playoffs, if they go far in the playoffs, they could at least bring some notoriety back to Madison Square Garden.
Well, and revenue. Like, if
exposure.
People had talked about, New York and will it come back. Like Cuomo's sort of giving indications that he's going to bring it back quickly.
Yeah.
Or reopen quickly. And people are going to flood into New York. Like New York's not going anywhere.
No.
And so the Knicks have been irrelevant for over 20 years. I think one or two times they've been in the playoffs in 20 years. That's it. And they usually don't have home court advantage, so they don't have many games. They're the fourth seed in the NBA in the East. And so that means they have first round home court advantage, second round most likely home court advantage.
Yeah.
And so that could mean 4 to 8 games. They're not going to the finals, but 4 to 8 games in Madison Square Garden potentially.
Yep.
That's a lot.
Yeah.
That's a lot. There's a lot of revenue that you can make out, especially if they allow fans, like if they can go to full capacity.
Yeah.
That would be insane, the revenue they can drive there. So that's where you make your money.
Yep.
is on the playoffs. That's just all icing on the cake.
The last sector, I should say, if you will, is going to be gyms and fitness. And we talked about Peloton and how we still feel like Peloton is worth holding, and it's actually done pretty well since we've talked about it a couple weeks ago, and said that this most likely could be a potential bottom for Peloton. It's done really well. Peloton doesn't just own Peloton. We've talked about how they also own Precor, which is exercise equipment that is also housed by Planet Fitness. Yep. So you look at Peloton, and that's doing pretty well, and we think that Peloton actually has tried to diversify their revenue streams. And you look at Planet Fitness, as people go into the gyms more and maybe have a hybrid approach, maybe they just need to get out of the house to work out. This is still pretty low, below its pre-market highs as well. And I think that there's plenty of upside with Planet Fitness too. Yeah,
Planet Fitness, I don't love the company as a whole, but technically it looks really good from an asymmetrical trade perspective, where it's at currently. So that's good. And Peloton, gets a little bit beaten up just because it was like a COVID play. By the way, did you see Andrew Schultz post a clip of that young comedian that did the whole Peloton skit?
No.
Oh, you got to watch it.
I didn't see that.
It's really messed up, but it's hilarious about all the kids
of course,
got hurt.
Andrew Schultz.
It's hilarious. It's all Peloton, the whole thing. So go to his IG and check it out.
All right, I'll check it out.
But yeah, I mean, Peloton will continue to be a monster from the long term.
Yeah, and I think that Planet Fitness definitely, there's upside here. I'm not saying they'll hold it for 10 years or nothing, but I think there's upside to it for sure.
Yeah. Let's first take this one because it's in the grouping. Barbenders, opinions on American Airlines. I mean, I already know the answer, but go ahead.
Yeah, so I appreciate the question. I don't like American Airlines for the simple fact is that they just burn through cash like crazy. I think they're going to do fine. I don't think that there's any reason to believe that they can't go up from here, but I think also that there's just better opportunities, and that's why we love Southwest. I think that's why we love Delta. So American Airlines will probably go up from where it's at, but I don't know if it goes up as much as some of these other ones will.
Yeah, one thing I like about your list is it really paints the picture of everything that's really out there. And I know as you guys, we've been hammering you guys on our perspective of reevaluate your portfolio on a quarterly basis. It's a good practice to just reevaluate your diversification, your weights in stocks, and just evaluate what's going on. And a lot of you we know have overweight portfolios in one direction or another.
Yep.
And you don't think there's a lot of reopenings, but there are so many different industries that you could look at that provide opportunities. And that's what that list does. Like so many different companies that will benefit in different ways off of the opening. So guys, I really want to do some form of portfolio review for the Chaos crew. We should find a way to do that.
Yeah.
It'd be cool to do that.
That would be cool. I would love to do that.
Whether it's like a video or whether it's part of the level 2 or level 3 or something, we should do it.
Speaking of which, if you guys want to be a part of that, make sure you're hitting the join button next to subscribe. And if you want to be a part of that crew and get all those goodies, and it's $4.99 a month. It really doesn't cost you a whole lot, but it helps support the channel and helps support the studio that you see behind you. So we certainly would appreciate it. The next thing that I wanted to kind of talk about, Fat Man Zoom, as the market has closed. Right now, the market closed in the red slightly. Nothing really too crazy. I mean, flat. I mean, the S&P was down, less than 1%. So was pretty much everything else. So not really anything crazy that I would worry about. But our old friend Tattooed Chef had earnings this morning.
Yeah, I was going to bring them up.
Were you?
Yeah.
What did you want to talk about with Tattooed Chef?
Wait, Tattooed Chef has earnings this morning?
Yeah, it had earnings this morning, yeah.
Huh. Okay.
They missed.
Why did I think it was
They missed by
week?
11 cents, but they beat on revenue expectations.
Yeah.
And the stock went up 10% today.
Yeah, I saw that. It potentially it's reversing the trend.
Potentially.
Which is
it's
good.
just one day. Let's just not get crazy. One day. But yes, it is potentially returning the trend here. It's up. It's had about 6 green days in a row.
That's great.
So, everybody, Fat Man Zoom.
Yeah.
Is Tattooed Chef a buy? Would you buy Tattooed Chef?
Would I buy it? No. Short term, yes. Long term, no.
So here's my thing. I think that Tattooed Chef could be a buy if it sustains this. I think we still have to get this up above. If we look at the daily chart here, it's an interesting dynamic because right now it seems like it's a little bit hot as far as...
Yeah, they had earnings on the... Are we sure? I'm sorry, I don't mean to put you on the spot. Arvin said they had earnings on the 12th. I thought we had this conversation last week because I thought it went down after earnings.
Wait a minute. Yeah, I don't know. This is weird.
They had 2 earnings, those bastards. Of course you're going to go.
I'm
10%.
getting multiple. Yeah, I don't know. I got some weird.
We
weird
talked
source.
about them last week. They had earnings.
I'm sorry. I'm sorry. Yeah, I don't know why. I thought this.
May 12th.
Yeah. Okay, that's my fault.
But they went up today.
They went up. Yeah.
Either way,
I don't know. So they went up today on. Products and Whole Foods. That's why they went up today.
Okay.
That's my fault. Wrong catalyst. Man, I blew it. But
my memory's horrible, so I always question.
No, mine is too. We're quite a pair. So if we look at this, do we still see this as a buy? I guess is what I'm trying to say. And if I'm looking at it from a technical standpoint, I think that there's potential for this. It just went up above the 50-day moving average, which is interesting because you rarely see this where the 50-day is below the 200-day. And so for me, I think that I would feel a lot more comfortable about Tattooed Chef making the change if it goes back above that 200-day moving average,
which is coming on the 200-day moving average.
It is. So there's still hope for this thing, but I don't know if I would just go chasing it just yet. I would probably wait for a pullback, some consolidation, something.
Tattooed Chef is a perfect confirmation bias stock.
Yeah.
Some people love it or you hate it. And the people that love it typically have confirmation bias.
They love that cauliflower pizza, man.
Yeah. It looks like it's going upon a resistance. It's also looking like it's coming upon the 200-day moving average.
$20.
Could act as a resistance, psychological resistance. So it looks like it's kind of setting up for profit taking.
Yeah.
But if it does break above that 200, I would feel good. I agree with you. Like, above that $20, above that 200-day moving average, asymmetrical trade, short term, try to catch a move. But I'm not betting my house on that.
You guys, listen, I'm going to own that one. You guys crack me up. Apparently, I need to hit the bowl.
No, we have a QB memory. In the stock market, it's good to have a bad memory.
That's
so you
true.
Don't get emotional.
That's a very true story. Arfin said, I was like, am I the only one having deja vu? No, you weren't. By the way, I do remember my name. It is Brad. What's your name?
There's a lot of names I have. Okay. Fat Man Zoom. All right, please review everything I've missed. Okay, let's start back from the beginning.
Let's do it.
Brad got fucked on AT&T. Am I getting us demonetized?
No.
Okay.
No.
I can say that?
Yeah.
What did I also? I went off on something. What did I get off on?
Whoa.
That's what she said.
Oh wait. I don't remember.
What did I get all crazy about?
I don't know. See the memory. This is a hell of a show today, guys.
Let's shut this thing down.
Shout out to you guys who are hanging around and still listening to this shit. We appreciate you.
I am still in Clove. I'm in Clove, people. That was good.
That wasn't too bad. Yeah, that was all right.
He goes by Zoom.
Yeah.
All right, guys, we're back tomorrow.
We are back tomorrow, and so I'm digging the daily live streams. I'm digging them a lot.
Yeah. Oh, Brad got a haircut.
Yeah, Brad got a haircut. I think that was it.
Clover went green, but it closed the day below $7, which
we went through an array of stocks that we thought were worth buying up in certain sectors of the reopening. That still have upside. So we're actually going to throw a clip up. We'll do that tomorrow. So if you feel like you missed it, you can either go back and watch or wait till tomorrow, and then we'll throw the clip up of that.
Drive Shack looking like it wants to be a snack.
Fat Man Zoom looking like that microphone's a snack. Just caressing the mic. Just caressing the mic. I wish I had a close up of that.
My love, it's only you in my life. The only.
Have a good day, guys. We'll see you tomorrow.
My first love. Bye.
Oh God.